Is the US dollar's reign ending? Morgan Stanley, welcome to a bold discussion on the future of the global financial system's cornerstone. I'm Andrew Watrous, G10 FX strategist at Morgan Stanley, and today we're diving into a topic that's both fascinating and, frankly, a bit controversial: the behavior of the US dollar in an ever-changing global economy. But here's where it gets intriguing. Despite whispers of its decline, we believe the dollar's resilience is far from over. It's Friday, September 5th, 10 a.m. in New York, and we're about to unravel why. The US dollar isn't just another currency. It's the linchpin of the global financial system. As the world's reserve currency, its fluctuations send ripples across markets, influencing everything from your investment portfolio to the cost of your next overseas trip. Today, we're exploring the dollar smile, a concept Morgan Stanley FX strategists introduced in 2001 to explain how the dollar reacts to different global growth scenarios. But this is the part most people miss. The dollar's behavior isn't just about economics. It's about psychology, geopolitics, and the ever-shifting sands of investor confidence. Imagine a curve shaped like a smile. On the left side, the dollar climbs when global growth falters, as anxious investors rush to the safety of U.S. assets. On the right, it rises again when U.S. growth outpaces the rest of the world, attracting capital inflows. At the bottom, the middle of the smile, the dollar weakens during periods of robust, synchronized global growth. Why? Because investors chase riskier assets, often borrowing in dollars to invest elsewhere, which puts downward pressure on the currency. Simple, right? But here's the twist. Some argue the left side of the smile is broken. They claim the dollar no longer benefits when global growth fears are rooted in U.S.-specific issues, like political uncertainty or trade wars. And this is where it gets controversial. Are they right? Or is the dollar's safe haven status more resilient than they think? Let's challenge the skeptics. To test the dollar smile's validity, we analyzed economic surprise indices, which compare actual economic data to forecasts. Over the past 20 years, when both U.S. and global growth were weaker than expected, the dollar rose an average of 0.8% per month. When U.S. growth outperformed, while global growth lagged, the dollar climbed even higher, 1.1% monthly. During synchronized global growth, it dipped slightly, by 0.1% per month. But does this pattern still hold today? We believe it does, and here's why. In 2018 and 2019, despite trade tensions and U.S. policy uncertainty fueling global growth fears, the dollar strengthened during weak global growth periods. Even in June 2025, when geopolitical tensions between Israel and Iran spiked, the dollar surged as investors sought safety. True. In April 2025, the dollar initially fell after tariff announcements, but it dropped further when those tariffs were paused, not because of global growth fears, but due to U.S. policy unpredictability. These episodes suggest the dollar remains a safe haven, even when the U.S. is the source of global concerns. Now, let's address the elephant in the room. The dollar's 11% drop in the first half of this year, its steepest decline in over 50 years. Marking the end of a 15-year bull cycle, we expect further weakening through 2026 as the Fed cuts rates and policy uncertainty persists. But here's the kicker. Even in this environment, the dollar smile framework holds. When markets wobble, the dollar is likely to respond with resilience. So, what do you think? Is the dollar's safe haven status truly unshakable, or are the skeptics onto something? Let us know in the comments. And if you've enjoyed this deep dive, leave us a review and share thoughts on the market with someone who'd appreciate it. Thanks for listening.